Hello, undisputed trader. Today I want to talk about how to use liquidity sweep to judge your buyers in the market. You understand? So, essentially, what is liquidity? Liquidity is the ability of the price to move towards where there are pending orders in the market. So that is what happened essentially. So, in the concept of liquidity sweep, the market tends to take out those pending orders. That is essentially liquidity sweep. So when it comes to liquidity sweep for buyers in the market, using it for buyers in the market, you have to use it to spot the last place that the last liquidity that was taken out, you understand. So once you understand this concept, you can use it to spot opportunity or to even judge the buyers of the market 80% of the time. So, and this concept works. I've used it several times to catch a good return to reward ratio, you understand. So let me go to my screen and show you how this thing works. This is a good example on the board that you can see here. You can see that the market has been trending down, breaking structure downward, but the last liquidity that the price took out before the change of character started happening is this place, you understand. So once you spot your last liquidity before this accumulation, and which eventually led to this break of structure or change of character, once you spot this thing, it is a sign that the market or the prevailing trend is losing momentum. You understand? The downward trend is losing momentum, and the next thing to look out for is change of character and probably the opportunity to find a change of buyers in the market. So for you to make this strategy work for you, you have to spot three things in the market. First of all, you have to look for liquidity sweep, and after the liquidity sweep, you want to see the market changing a narrative. It will no longer forming higher lower low, rather it will change to higher high, you understand. So once you spot this thing, couple with your fair value gap, a fair value gap or other block should be found around here, you understand. Once you spot this opportunity, you can now send the market upward, you understand, to ride it upward. So this is how big guys trade in the market, and this thing happens majority of the time. After this analysis and this analogy, I'll take you to the chart and you're going to see it manifesting live on the chart. It happens 80% of the time. If you can use your liquidity sweep to judge your buyers in the market, you are going to win the market and you are going to be happy. So before we go, what are the key things to look out for? Number one, you have to look out for the last liquidity that the market took out in the market, in the price action. The last liquidity in the market. Number two, you have to look up for change of narrative. That is the market changing from forming higher low, you understand, lower low rather to or higher high. In the case of bullish momentum, you want to see the market changing rapidly from forming higher high to forming lower low. So that is the case. It's still the same thing whether you are using it for downtrend or uptrend. Is still the same thing. You have to follow the same procedure. So this is how to do it. Once you spawn the change of narrative, then followed by another block, your fair value gap. You want to see the price return to another block or fair value gap. So once you have this thing coupled together, you are going to win the market. So let's head to the chart. Let me show you this thing happening live on the chart. 80% of the time you are going to see it happening live. As you can see, this is the Great Britain pound chart here. This is a Great Britain pound chart here. So this is the Great Britain pound. Before the market actually starts changing direction, you can see it. Before the market started changing direction to the upside, previously you can see the market has been coming down all this place, and all of a sudden the market started changing direction to the upside. You understand? And before the change of direction to the upside, there is this liquidity sweep that happened. The last place the market break structure or support. You understand? So, and this liquidity sweep happened around this place. Let me show you guys. Let me show you. So the last liquidity sweep happened around this place. So this is it. The last liquidity sweep happened here, exactly around this point. So this is the last liquidity. Ordinary other trader will be putting their their stop losses here, believing that the market, once the market return to the support zone again, it will go up. No, but it not just go up, it will take out the liquidity. So this liquidity will help you. This is the last liquidity that the market took out before the rapid movement to the upside, which eventually broke structure around this zone. So this break of structure confirms that the narrative is gradually changing. You understand? So as from this point now, you can find opportunity to buy the market using the fair value gap and the order block. You understand? So the moment the price return to any of the fair value gap or the other block, you can take your trade, or you can use the breaker block to analyze your trade as well. In this case, this is the breaker block here. This is the breaker block. You can use it. You can use it to spot opportunity in the market, or you can use inverse fair value gap. In this case, our inverse fair value gap is here. You understand? This is the inverse fair value gap here. So once the price return to this inverse fair value gap, you can now ride it to the upside. So this is it, guys. This is what I have for you. And if you want to join my community to learn more with us, we are here to help as well. So thank you.